Do you want to know what's going on in the Las Vegas real estate market? Stick around and I'll review some key figures from February and what it means to you whether you're looking to purchase or sell. Hi everyone. Now there are 5 factors that I like to look at when studying the real estate market for single-family homes in the Vegas Valley. Many realtors will give you the sold data. While I think that's important, I think the more critical figures are as follows: the number of homes that sold, how many listings were added to the inventory during the month, how long houses are staying on the market, and the number of pending transactions, and lastly, the total number of current inventory in the valley. Now these figures give you a much better idea of the health of the market. The only sold data I like to report is the number of homes sold, which usually is a byproduct of the other data points. Total sales in the valley saw a 25% decline from the same month last year. Sales fell to 1,667 this year, while over 2,400 homes sold the same time last year. Now let's examine the other data points and see what conclusions, if any, we can come up with. New listings during the month also fell. February saw an 18% decrease in new listings this year, from 2,940 to a little over 2,200. The number of days on the market for properties that have sold have gone up significantly. This February, it took 43 days for a house to sell. Now that's a 470% increase over last year's days number of 8 days. This number can be misleading because it accounts only for sold houses. The more accurate measurement, in my opinion, is how long homes that have not sold remain on the market. And that figure is over 130 right now. The reasons for that number could be many, but more often than not, price is usually the culprit. Pending transactions in the valley saw a decline of 15.7% from the month of February to last February, from 2,600 in contract last year to just over 2,200 in the valley this year. And lastly, inventory. Compared to last year, inventory increased by 55% from 3,200 to over 5,000. However, the number of available homes to sell is rapidly declining weekly as fewer new listings are coming on the market to replenish the inventory. This development has somewhat insulated the value of homes in the valley, where high interest rates would typically cause house prices to drop. So let's wrap this up. In conclusion, we've seen a significant decline in new listings, pending contracts, sold properties in the valley, and also ballooning inventory. And what do you think could be the cause of all this? The short answer is mortgage rates. Rates were below 5% last February and even lower just before that. At the time of this recording, they were over 7%. This development has done 2 things. It has sapped precious buying power from potential buyers while simultaneously discouraging potential sellers who are enjoying an artificially low interest rate on their current mortgage from listing their homes. So if you plan to buy or sell, it's best you be cautious in this market and get expert advice from a licensed realtor who can guide you through a potential minefield. Now listen. Every situation is different and has its own unique set of circumstances. And that's where we come in. We tirelessly comb through all of the data to find reasons for what's happening and to keep you informed, but we also look for instances of opportunity for our clients daily to help them make the right decision for them. Thank you very much for watching, and we'll see you next time. Have a great day. Bye.